So could we talk a little bit about the investment case, particularly within the tech sector in developed markets, considering how hard that has run over the last few years?
Yeah, absolutely. I think a lot of investment analysts and investors themselves have been sort of caught off guard at how long this most recent sort of era of tech dominance has gone on, right? Basically, since the financial crisis, tech has been the single best performing index sector in the market. So when you look at something like a standalone tech sector index, like the S&P Tech Sector Index, since year-end 2007 through year-end 2024, it's up over 1,000% in terms of total return. That's a really, really good performance. That's about 15% annualized total return versus about 10% annualized for the broader U.S. market with something like the S&P 500. Now, the Nasdaq 100 has actually even exceeded that a little bit because, again, it is not 100% tech. It's got some of that other sector exposure from consumer names, from healthcare. It has managed to exceed the single best performing sector in the U.S.
Wow.
While giving you basically half the concentration, right? Half or twice the diversification if you want to think about it the other way, not going all in on tech all the time. And so when you compare it to something like the S&P 500, it's more than double the cumulative total return over that time frame. Even when you compare it to something like leading large cap growth benchmarks in the US, Russell 1000 growth, S&P 500 growth, it's about 1.5 times the performance cumulatively of those benchmarks. So it's pretty much giving you tech sector performance with twice the diversification, and it's giving you a substantial improvement on what companies consider to be companies that are considered to be growth companies in the U.S. have been performing. Now, how long can this continue? It can't continue forever.
Sure.
I think most people realize that. But the question, the debate, I think that is really, really fascinating right now is to try to understand what has been driving this growth over the last 15 or so years. And is there anything changing about those growth drivers in the next few years, at least, going forward? From our vantage point, we don't see it. That's not to say the index can't go down this year or next. There are a lot of different factors that impact equity index performance. But in terms of those overall sort of underlying growth drivers, what has made these companies succeed and outperform the last decade and a half, close to 2 decades now, a lot of that doesn't seem to be changing at an underlying level.